G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now it's resuming a bullish momentum at the moment on the daily. We'll cover the charts in a second and also go through some back testing. Before you go any further, make sure you hit that like and subscribe button to support the channel, and also reference the Patreon page, links in the description below, where we also cover weekly bullish shares and +1 videos.
But first, the fundamentals.
So where we are today, as of early December 2025, the S&P 500 stands near 6870s, 6895, reflecting broad strength across large US companies, buoyed by optimism about potential interest rate cuts and resilient corporate earnings. The NASDAQ composite has also rebounded, benefiting from renewed investor appetite for tech, though tech remains more sensitive to economic and policy shifts. On the flip side, the geopolitical backdrop is increasingly complex. Ongoing conflicts in Europe and the Middle East, supply chain disruptions and global trade tensions inject an undercurrent of risk. While US economic fundamentals remain solid, global instability and inflation commodity risk could weigh on market sentiment, especially for growth and tech-oriented stocks. So we always start with the long-term view, and on the weekly chart, the S&P is still showing bullish momentum above the moving averages, has been doing so for a number of months now. But notice the CCI has dropped below the moving averages recently, last couple of weeks. But it's finally broken above that very narrow moving average range at the moment. So that's a bullish momentum, and we have drawn this bearish divergence between those highs on the CCI versus the highs on the price, and that indicates a potential retrace if the price should pull back. There's a bit of a resistance happening at the moment. You'll notice there it's sort of almost a double top, and we draw this Fibonacci retrace from that high. We take it back to the significant low before the divergence started, and that would have been that point there, and that's at 38% Fibonacci retrace potential. Again, more than 90% of the time it does retrace. Sometimes it fails, but so far, as long as that CCI keeps dropping and the price keeps rising, then we'll just readjust that Fibonacci range to wherever the new high is. That's the weekly. On the daily, again, it's hit that resistance, and we would have been going along if you're trading on the hourly based on that candle breaking above the moving average of the price, and also the CCI above the moving average range. That would have been a nice little bull run to take if you're trading on the hourly. At the moment, also notice we did have this longer term bearish divergence on the daily, independent from the weekly, but we've also got this secondary double top there on the price almost. That high is still a bit lower, so not quite there yet. But notice the CCI highs are dropping off. So almost a bearish divergence happening at the moment. If that starts to pull back, then I'll draw a target range for it now. So let's assuming it bounces off that resistance down to that low before that, we take it to the significant low before the divergence started. That would have been that point there. And if it does pull back, we can expect somewhere in the range, very narrow range, very small one, in that little range there. If it bounces off that resistance, it'll pull back there. That's all you need. Sometimes it goes right through it. Other times it just touches it and bounces. So it's a very narrow range nonetheless. On the hourly, again, notice here we had a bearish divergence here. That one failed. You can see the CCI dropped. The price dropped a bit, not quite enough, and then it bounced higher, and that's now invalidated. You can see there, that high is higher than that point, and that's now been invalidated. So that divergence failed. So we'll delete that, and we'll delete that. So at the moment, bullish momentum, except on the hourly, it's below the moving average ranges. So just be cautious. I'd like to see that ideally break through that resistance to be more confident about bullish momentum. On the back test, again, going long according to the daily, where it broke above the moving averages, you would have gone long from that point. And it's had a few little trades, opening and closing. In this area, had a couple of average downs with the price dropping below the moving average range, and you'd be up about $3,000 on that point at the moment. So for the NASDAQ on the weekly, first off, again, similar to the S&P, the price is above the moving averages, not quite reaching that previous high there. And the CCI is also dropping off. So lower highs on the CCI versus high highs on the price. I've drawn a target Fibonacci range there, hasn't quite reached it. Again, if this CCI keeps dropping and the price starts to drop, that'll be our immediate target. But no other divergence currently. On the daily, again, I've drawn that resistance up there. Not quite up to that level yet, but the price and the CCI are broken above the moving averages. So I've got a small window at least for potential bullish momentum. And you would have been going long according to that arrow there on the hourly, if you're trading the hourly. And there's no divergence currently in play, although we did have a bearish divergence longer term back here. And that is already executed, as you can see there. If we draw a divergence from those highs, that hit that 23-38% range, just touched the 23%, then it bounced. And that's all you needed to do to execute it. On the 1 hour period, again, we had a little bearish divergence there, didn't quite reach it. And since then, the CCI has risen, which has now invalidated that divergence. So we'll remove all those lines and targets. So currently no, actually we've got a divergence now playing out. Just looking at it, we've got lower highs on the CCI there versus high highs on the price. That's a bearish divergence. And again, a very narrow range. We draw a target range down to that level. It's a very narrow range, but you can see there it's effectively already touched it with those wicks. So not really anything significant to be concerned about, but that could actually still fall and fall a lot further to the downside. So just be cautious of that. Sometimes these can go quite deep. On the back test, again, you would have been going along from that arrow according to the daily, and you would have taken those little long trades there. Bit of a drawdown there, but again, you could have held it as long as it follows the daily trend. Keep holding it, and you would have averaged down a couple of times, and you'd be up about just over $2,000 in return on those few trades. To get some share trading ideas, why not subscribe to the Patreon page? Links in the description below, and also the +1 videos are there. These are some of the trades we've taken this month in December so far. These are all closed, and so far in percentage terms, they've returned 3.27% in about less than 5 days of trade. Last month, to show you the results, last month, the return in percentage terms of total trades we've taken was 5.6% in a month of trade. That equated to about $3,000 in returns.
Really?
So go to the links in the description below to access the Patreon page, and that's where we do cover those bullish shares each week. Hit that like and subscribe button. Thanks for watching, and see you in our next update.